Hello viewers and welcome back to the Dukascopy TV studio. Joining us once again is Jean-Francois Owczarczak from MJT. Jean-Francois, thank you very much for coming in today.
Thank you for having me, Ben, again.
Not a problem. Now, firstly, if we can take a look at some of the events that are coming up soon. We have the FOMC meeting minutes from December, which will outline their decision to begin tapering and perhaps what could happen in the future. We also have the ECB press conference, which may outline whether a rate decision will be imminent nearby as well. Could you explain how these events will affect the markets?
Okay, well, first of all, Happy New Year to everyone, as this is the first one of 2014. And basically, we believe that much of what is coming out of the starting of the tapering has been priced in. And so we don't see a dramatic effect of it as for now. So it may be a bit more dollar supportive. As for the ECB, well, if they're a bit more dovish than we could expect, that could basically confirm that view. Now, our main stance is that most trends that had been in place at the end of 2013 are still in place, and especially on equities and on interest rates. And as for currencies, we would see, or we would look towards the euro dollar and the dollar Swiss to maybe outline a first term of caution that these trends could be changing. And so still quite confident on equities and on interest rates, and looking to the currencies to probably give us an early signal of reversal. Now, I've put here the private lists of the different items we follow every week. So we have here the euro dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months treasury, 3 months future for the S&P, and 3 months future for the US treasuries. And we're looking at them on a daily perspective, which is a view over the next few months. And what we could see, and we'll focus on each one individually afterwards, but basically most trends that we had been having a look at are slowly coming to close to exhaustion. If you look at euro dollar, it's seeing a second point of stress here on our envelopes, and it's slowly getting into the target zone. Similarly, a bit more space here on cable, but in a similar situation. If you look at dollar Swiss, it had been heading down, also getting towards a point of stress with some exhaustion on the targets. On dollar yen, still seems to be a bit of potential here. Equities, also a bit of potential. Treasuries moving lower, also a bit of a potential. And incidentally, gold is still under pressure and Australian dollar is still under pressure. Now let's focus on each one of these, and starting with the euro dollar. So with the euro dollar, we had stressed last year that we were at the beginning of an uptrend. Our targets were quite aggressive, showing some impulsive targets which were much higher, but we had in fact barely made it over the corrective target. So we'd still be cautious on the longer term with a slightly bullish stance, but still considering it as a trend to be proven. Now, in this context, we could see that we're slowly getting towards an overbought or an exhaustion phase here on the dailies. You can see that we're slowly got into our targets here. Also, on pure technical analysis, we tried to move higher than the tops we had back in October. Didn't happen, so that is a sign of weakness. And we can see our envelopes flattening out a bit and a second point of stress. That is corroborated here down below with our oscillator being in the overbought situation. So they're both being coordinated. It may be that we have already entered a period of consolidation on a euro dollar. Now, shorter term, we can see that on our hourlies, we've started a correction since late last year. And although we're slowly getting into a point of exaggeration over the short term, it is still early stages, and you can see that we expect a bit more to go. So maybe a bounce over the next day or so, but we expect this trend to continue over the next week or so. Now, going back to the mosaic, not much to say on dollar Swiss because it's basically very often the opposite from euro dollar. Cable is pretty much the same but a bit stronger. If we look at dollar yen, we had toned all through last year that we believed that the move up for the dollar against the yen was not over. Our long-term trends were still heading up, and with quite a bit of potential. We had targets around the 110 level. We're seeing here with a bit more volatility now that it could actually go up to 111, 111.50 over the next few quarters. Slowly getting a bit overbought over the daily. Maybe a point of stress here, but the envelopes are still heading up quite nicely, so it would only be an intermediate situation. And you can see this intermediate correction here on the hourlies with this bear signal here and these corrective targets on the screen. As long as we stay above the corrective targets here, and I'll just zoom on it, 103.60, you're only in a lateral correction, and there's no reason to think of reviewing the long-term trends. Now, focusing on the other assets, let's look at equities. Well, we had been bullish almost all through last year on equities. We had signaled the top in May. We had told people to get back into it in June. It is expensive. I mean, you can see our impulsive targets have been reached over the long term. We are in the red here. The envelopes are touching each other. Similarly here, there's probably a bit more potential on the daily, but it's also expensive territory. Now, we do believe it's not quite over yet. It's going to extend into the new year. We're probably seeing important tops coming in towards the end of the first quarter, beginning of the second. And so at the moment, yeah, the year started a bit negative on the negative side here. But actually, it hasn't dented the trend, and we still think it's heading up over the next few days or weeks. So we wouldn't be too worried on equities up to now, even if it's expensive, so it's probably not the time to put a huge bet on them. Now, focusing back on the mosaic, we'll have a look at interest rates. We had been bearish most of the year on the treasury bonds, so bullish on interest rates. It's still only corrective for now, but it's still a bit more potential here down to the 124 level without it having to hit important support. And so, and this, we think the trend is not quite over. And as you can see here on the dailies, it's still heading down. That also goes quite well with the beginning of a tapering. So again, the minutes will be important to see exactly what they're telling us on that. And a bit of a correction at the beginning of the year, but not enough to at least turn the trend on the hourlies. So still negative on bonds and a positive on rates. And as we toned all through the year, we also think that the coordination here is due to the fact that it's not much inflation, it's more real interest rates coming up that brings a price to holding gold. And so we don't believe gold is going to make a huge move until interest rates start to come down again a bit. And so still negative on gold. Now, that said, we are in a bit of an exaggeration here, focusing on the weeklies. We are well into the oversold zone, although the envelopes don't confirm that yet. So maybe a bit late to sell into gold at the moment. Wait for maybe this short-term consolidation up to come to an end over the next week or so. And now finally looking at Australian dollar. Well, I'm not going to expand too much on it, but it's pretty much in sync with gold at the moment.
Okay, so overall, the trends that were apparent at the end of 2013 have stuck into the beginning of 2014 with a few changes, as you said. But looking forward, are there any areas that you would be cautious about looking at the information? I mean,
in general, we would have to be cautious because, as you see, most of the trends here are coming towards the end of their targets. And basically, the weeklies seem to tell us that we would still be good for another 2 months, 3 months on the S&P. On bonds are correcting. Incidentally, on gold and Australian dollar still correcting. Dollar yen still seems to be on the upside, although it's probably close to a short-term exaggeration. I'd look probably to euro dollar and dollar Swiss to give me a lead on these trends are turning around again. And so cautious with last year's trends and keeping my eyes open, but I do think they may extend for another month or so, maybe 2 months.
Jean-Francois, thank you very much for coming in again. Hopefully we'll see you soon.
Okay, thank you for having me, Ben.
Not a problem. And thank you viewers for watching. Make sure you stay tuned to Dukascopy TV for more updates and exclusive interviews. But for now, goodbye.